But you just heard them say that the markets are down today. There's a little bit of disappointment because there's a feeling that with reasonably strong inflation and kind of strong economy and mixed news on the labor markets that the Fed might take a Santa pause, take a pause in December. Do you want to make everybody happy and tell them that that's not going to happen?
Look, my thing is, A, I'm only allowed to speak for myself, not for anybody else on the committee or for the committee as a whole. And B, I don't like tying our hands. We're going to still get a lot of information and data before the next meeting when we have to decide that. And we're going to get to discuss amongst ourselves, and I'm going to hear the views of other folks on the committee. I know the market's business model is to react immediately and in the most extreme terms to rumors, and that's not the Fed timetable. What we need to do as a central bank, I think, is focus on the through line, and the through line has been substantial decrease in the inflation rate from its highs, the job market cooling to something like full employment, where if it stayed right where it was, that would be a perfectly fine, steady state outcome. And to do that and hold it in that kind of position, I think we're going to be looking at rates coming down over the next year along the lines of what the dot plot said. So I still think we have a long way to go down with rates. How fast that happens, you saw Chair Powell saying that there's nothing that says it has to be immediate, and I'm comfortable personally that if there's some dispute about what is the neutral rate at which we're going to settle down, if there's disagreement about that we don't just charge right to it, that we slow the pace as we get toward it. But again, this is playing out over a longer period, I think.